Hi everybody, this is Gary dealing with Sentiment Timing, and this is our free technical video report for Wednesday, February 28th, 2018. I hope you guys are having a great trading week, and let's get started. So I'm going to go over really everything that has been going on and how we use it with sentiment timing, and using the time aspect, the sentiment, and the technicals, and combining them all together. And sometimes you're going to have sentiment and technicals that combine together to give us a short-term direction when the time aspect is still a little bit out, meaning that the larger turn won't happen until the particular time period, but you're going to get moves up and down into that turn date, and that's pretty much exactly what has been taking place. And we, on Tuesday, after we had that big run on Monday, we had registered a 98% bullish reading. So the big move on Monday gave us the 98% bullish reading, meaning that now everybody that was bearish on this market, and they were bullish up here, not thinking the market was ever going to go down. Then when it came down and everybody started getting bearish, the market started going up again. And then once they started dipping their toes into the bullish sentiment range, that was our signal that we were expecting some type of pullback. And what I had put in, this is the morning notes that I put out. I put them out on Monday through Friday, and really it's just a short-term pivots, what to watch for, and it follows the direction that we're looking at as far as the overall market. So it's we look at things on a short-term basis, and then we also look at them on an intermediate term basis, meaning that the current trend, we know it should continue into the next turn date. Now that is obviously up, and but when we start getting into periods where we're getting high sentiment readings, and then we're also getting technical resistance areas as well as bearish divergences, it's telling you that move to the upside, as much as it's still going to continue at some point, we are going to get a dip. And what I had put in the morning notes was that the futures are fairly flat, and that we were forming a bull flag suggesting another break to the upside. And then once we get above the 2786 on the S&P futures, it's going to trigger sell signals, and would not be surprised to see some selling in the coming hours or days. The downside targets would be 2759, 2746, and then 2730, and that was when it was currently trading at 2781. So we had to get above the 2786 when it was at 2781 to trigger the sell signals, and we were looking for a 20 to 50 point retracement. Now, it didn't mean that was it. It's just saying for that particular day, that's what we were looking for. And what I had said was that we may not see selling start until 2790 to 2810. And looking at volatility that in that morning, because yesterday the futures were kind of flat to up a little bit, and volatility was up a lot. So the short-term volatility, the VXX, was up 75 cents, and that's a big move for it. So it's telling us that traders were not really comfortable with where we were at that particular period, and we were running into resistance. We knew we had a high sentiment reading, and on top of that, we were going to get bearish divergences that were going to be triggered with the higher high. And what it was, what I was saying was that it wouldn't be a bad time to manage your long positions closely if trading, and if looking to hold and add to the long trade, wait for the pullback at support levels. Now on the S&P, we were looking at resistance at 2791 and 2800, and if it gets into that area, it may not be a bad place to close or manage long positions. So let's take a look at the ES first, and here is where this is what we were trading at yesterday. This is that bull flag. The market opened, and if you remember, here's the spike up that the that the futures had, made it right up to that 2790 range, and then from there we just came crashing down, and by the time we closed, we were right at the 2740 pivot, and if you remember, that is where we were looking at, the 2746. So we got it from the 2790 down to the 2746. So that's you know, pretty much what we were looking at. And if we take a look at the S&P, now, if you remember, what we were looking for is a move to the 2790, and that made it up to the 2790, and then from there, it came down to where we were looking as far as the next pivot, which was going to be someplace down in that 2750. So everything's kind of played out on the short term on it. And then today, when we were about to you know, open up, what I was basically telling you know, the members was that we're in the technicals are starting to roll over on the S&P, and it has to be, caution has to be warranted on it. And the bears, this is what we were looking for, is the bears defense line, and that was the 2755 up to the 2764. And if it got above the 2764, it could mean that the drop was completed, and that was, you know, a possibility. But taking it on a day-to-day basis, because we knew we had the high sentiment and we had bearish divergences, instead of marrying one side was you know, was the way to go. Now the bulls defense line was 2738, and if it lost that, it was going to go down to 2727 or 2714. Now again, let's take a look. This was the bear. This is where the bears had to defend. If it got above this high here at the 2764, it may have said that this was over, and that we were now heading higher. But the bears came in. They defended this line. This is where the bulls were supposed to defend. It's 2737. Once they lost that, look where it went to, right down to the 2714 level. So the pivots came in play on it, and it was, you know, as far as trading wise, it was a great, you know, great little suggestion on it. So let's take a look at what Woody had to say. And this is on the 26th. It was a great. This is what we're looking at on this, is that we're looking for a bounce into, and this is the turn date that I'm talking about that I can't share with you. And it was a great buy the dip. That was the first drop, and there may be another one looming. So we had the 98% sentiment reading, and he was saying that we may have another buy the dip looming, and you know, game on. So the 98% bullish gave us the warning sign. Now what we're looking at is the recent mini plunge looks like it was just another buy the dip, but stocks have actually entered into a new and different wave. They are closer to an important high. However, at least one more buy the dip is coming. So we are telling members, expect the drop. This is what we're saying. We have the important turn date that is coming, but we still have another dip that's coming that should be bought. And this is, you know, that really, it's hard to go over all this because there's a lot of important dates that are really coming into play, and these dates, when they match up with sentiment and technicals, you get these fantastic trades, and that's really what's been happening with it. So one of the things that I really, you know, saw that I took notice of in this was that that stocks were profiled to bounce into, and this is the turn date that we're looking for. Now there are several potential topping dates, and again, we have these dates here. The projected dates are the middle of the time zone, so there may be a process to the recovery before settling up the next decline. So we're getting into, once we get into this turn date time period, we're going to see more chop, and this is what drives traders crazy, is when they jump long because we're breaking out and then we're back down again, and this is what's going to happen before we see, you know, that next important top, and from there the decline will hit. And really what we're looking at with this decline, the next important area that you want to keep an eye on is this the 2700 down to the 2694. If they lose that, then there's a real good shot that we're going to see the S&P trading all the way down at this 2659 level. So this is the important support zone for the S&P. If that gets lost, excuse me. Don't I would not be looking to buy until we get down to the 2670, 2659. And the crazy part is that if you notice, we have the 5 waves up here, and if this retracement could come all the way down to 2586 and still be in a bullish pattern. So things are going to be kind of crazy, and we do expect that a low is going to be made, and once that low is made, we're going to go and make another new high once that's done. And really what you want to do is keep, as we start approaching the turn dates, figure out where these actual lows are going to come into play. And the way you do it is you look at the support zones and you say, okay, 2700 to 2690. If they lose that, the next support zone is going to be 2772, 2659. I'm sorry, 2672, 2659. If they lose that, then we're going down to the 2630, and we possibly could go down to the 2586. But what you want to do is see one of these support levels hold, bounce up, come back down and test it, or just have some kind of back test, and then once it takes out that high, that's going to trigger your long position, and you simply just ride it up until it takes you out. And this is it's been a great trading environment, and like I said, you have to be really proactive in thinking ahead on what's going on, because here we don't have our important top date, but notice we had the bearish divergences. And let me go to the 60-minute chart here. We were into resistance, we came up and we had bearish divergences, and we had 98% retrace, 98% bullish sentiment readings, and with that we suggested get out of your long positions. It was a great ride, especially if you took it from down here to up here where we closed the trades, and then once it broke out of this bull flag, took it again, and it was another 40-point move to the upside. Now it's neutral, and then we wait and see where the support level holds, and when that happens, you get long again until we make this last move that's going to take us into the next turn date, and then we could see something like this again. We're going to take it day by day and see what happens. I'm not promising anything like this, but the way that the wave structures are set up, I wouldn't rule it out. But again, the market's going to do what it's going to do. We're just going to try to let you know beforehand what we see playing out based off of sentiment, technical time, turn dates, as well as the regular technicals. So let's see what plays out this week. Again, keep an eye 2700, 2790. If they lose that, the bulls, then expect these pivots to come into place. The bulls really need to get it back above the 2760 to gain control. And with that, have a great night, and I'll talk to you guys next time.